Welcome to Right Now News. Target is facing a class action lawsuit that has sent shockwaves through corporate America. The lawsuit, filed by the City of Riviera Beach Police Pension Fund, centers around Target's diversity, equity, and inclusion initiatives. The lawsuit alleges that Target misled investors about the potential financial risks associated with these initiatives. This case has ignited a fierce debate about the role of social responsibility in business and the potential consequences of corporate activism. The lawsuit specifically accuses Target of making false and misleading statements regarding its DEI policies. Investors claim they were kept in the dark about the potential backlash and financial fallout from these initiatives. They argue that Target prioritized a social agenda over its fiduciary duty to shareholders. The lawsuit seeks financial compensation for the alleged losses incurred by investors. This legal battle has far-reaching implications for the relationship between corporations and their investors. It raises critical questions about corporate transparency, the limits of shareholder activism, and the potential consequences of prioritizing social goals over financial performance. The outcome of this lawsuit could have a ripple effect on how companies approach DEI and other social impact initiatives in the future. At the heart of the lawsuit are claims that Target intentionally misled investors about the financial risks associated with its DEI initiatives. Investors allege that Target painted a rosy picture of public support for its social activism, while downplaying the potential for backlash. They argue that Target's public statements created a false sense of security, leading investors to believe that the company's progressive values would translate into continued financial success. Investors also claim that Target misused company funds to advance a political agenda. They point to Target's 2023 LGBT Pride campaign as a prime example. The campaign, which featured a range of Pride-themed merchandise, sparked boycotts and protests from conservative groups. Investors argue that Target's decision to double down on the campaign, despite the backlash, was a politically motivated move that ultimately hurt the company's bottom line. The lawsuit contends that Target's actions constitute a breach of its fiduciary duty to shareholders. Investors argue that Target prioritized social activism over maximizing shareholder value, leading to financial losses for those who entrusted the company with their investments. This case has ignited a fierce debate about the limits of corporate social responsibility and whether companies should be held accountable for the financial consequences of their social and political stances. Target's 2023 LGBT Pride campaign proved to be a turning point for the company, marking the beginning of a tumultuous period marked by controversy and financial setbacks. The campaign, which featured a wide range of Pride-themed merchandise, including clothing, home goods, and children's items, ignited a firestorm of criticism from conservative groups. These groups accused Target of promoting a woke agenda and vowed to boycott the retailer. The backlash against Target was swift and severe. Protests erupted at Target stores across the country, with some demonstrators vandalizing merchandise and harassing employees. The company faced calls for boycotts from prominent conservative figures and organizations. The negative publicity surrounding the Pride campaign took a toll on Target's reputation and, ultimately, its bottom line. Target's share price plummeted in the wake of the controversy, wiping out billions of dollars in market value. The company's decision to pull some Pride-themed merchandise from its shelves, in an attempt to quell the backlash, only seemed to further inflame critics. The Pride campaign fallout served as a stark reminder of the potential financial risks associated with corporate activism, particularly in today's highly polarized political climate. Stay tuned to Right Now News for more breaking updates, in-depth analysis, and the stories that matter most. Don't forget to like, share, and subscribe to stay informed and connected. See you next time.